about to start. So, hi, a very good morning to everyone. I extend a warm welcome to each and every one of you who have gathered with us for this ACCA masterclass on overview of IFRS and financial reporting principles. I'm Rohit Gupta. I serve as an associate director with Thornton, Bharat, and I'm pleased to be your host for the next 3 hours during the course of this masterclass. I would like to express a big gratitude and thank you to all of you who have managed to join us on a Saturday morning. I do understand it takes a lot of energy and pain to be joining on a journey on a weekend, and that too on a Saturday morning. But I can assure you, with the stellar lineup of speakers we have, we are committed to providing you not only with valuable insight, but a lot of wealth of knowledge over the next 3 hours. So I would request everybody to be engaged, be hooked to your seats. The session is going to be quite engaging. We would also be issuing a certificate of participation at the end of this masterclass. So it brings you more reasons to ensure that you're glued to your screens and as attentive as possible, so that you can get that certificate also. So before moving forward, just to set the context right for this masterclass, in the recent times, with the rapid advancement in technology, the accounting and finance domains has also witnessed a lot of significant transformation. So ACCA, as one of the world's fastest growing accounting qualification, has gained a lot of prominence by meeting the demands of this ever evolving business world. The comprehensive curriculum and which this qualification offers and promotes a broad range of knowledge and technological advancement, which actually helps the professionals to groom themselves and navigate through this technological transformation. Keeping this view in mind, we decided to come up with this masterclass on ACCA, where we help to aim to decode ACCA as a qualification, shed some light on how Thornton, being an educator and an employer, also can contribute to the ACCA journey. And finally, we will have some great insights coming from our co-speakers on how IFRS and financial reporting principles contribute as a part of the ACCA journey. So without taking much more time, I'll quickly run through that what is the agenda for the day, what exactly we would be covering, and then I'll quickly introduce my co-speakers and then would request them to take the discussion forward. So in terms of coverage, we'll be starting with a quick introduction about knowing who all our speakers are. We'll have a quick introduction about what Thornton Bharat is, what are the different solutions which are offered by Thornton Bharat. We'll briefly speak about LearninGT, which is the training vertical or the training arm of Thornton Bharat, through which all these training programs are offered to our clients and to the outside people. We'll try and understand a little about ACCA, the whole structure of ACCA qualification, and how the entire structure works out. Then we would be moving into the principles of IFRS, the objective and scope, what are the different components of financial statements, the journal features of financial statements. In the end, we will talk about that how a typical journey with LearninGT, a typical journey of ACCA with LearninGT looks like. And in the end, we would be open for question and answers. And I'll request each one of you to ask as many questions as possible, because the whole idea is to make this masterclass a success. And this success would only come when you guys help us in making this as engaging as possible. So now just moving on the round of speakers which we have. So we have Kapil Arora with us. So Kapil is a director with Thornton Bharat. He holds more than 18 years of experience in the learning and development space. He's one of our chief architects of LearninGT as well. By profession, Kapil holds an associate of chartered accountant's degree, and he has done his bachelor's in business administration from IP University. He's an active speaker. He has trained more than 12,000 professionals across industries and more than 7,000 students on different accounting areas. He has designed and developed multiple training programs for corporate universities and various other forums. Having an extensive experience of working on the consulting front, he has delivered various accounting and Companies Act-related projects for clients such as Hero MotoCorp, Indian Oil, Vedanta, Indus Towers, etc. Kapil, we are pleased to have you here, and a very warm welcome to this masterclass. Then we have Pradeep. Then we have Pradeep with us. Pradeep is a director at Thornton Bharat. He holds more than 15 years of experience in sales and marketing across industries. He leads the marketing, business development, and strategic initiatives at LearninGT. Along with Kapil, he's also one of our chief architects who have designed and developed LearninGT as a solution for Grand Thornton, Bharat. He has done his PG diploma in sales and marketing from XLRI Jamshedpur. Being an active speaker, he has delivered various counseling sessions across different universities in India, promoting entrepreneurship among students. His expertise lies in social media marketing with diverse experience of working in industries like BFSI, education, and consulting. A very good morning to you, Pradeep, and a very warm welcome and pleased to having you here.
Very good morning, everyone.
Yeah. So we have Jyoti Gupta with us. Jyoti is a manager at Grand Thornton, Bharat. She comes with more than 15 years of experience into sales, marketing across various industries. She leads the strategic initiative of ACCA qualification at LearninGT. She's a graduate from Sri Aurobindo College, Delhi University, highly skilled in designing various brand solutions and strategies for our clients. She has worked in different startup companies and help them elevate their sales and marketing strategies and initiatives. Being an active speaker, she has conducted various counseling sessions in different universities. A very warm welcome to you also, Jyoti. Yeah. So in the end, guys, hi, I'm Rohit Gupta. I've already given a brief intro. I work as an associate director with Grand Thornton. I basically lead the student facilitation team here at LearninGT. I come with over 12 years of experience across different training industries. And I, along with the entire team, are committed to deliver whatever we promise to our ACCA and other students. So that's a quick introduction of our entire team. Now, I would just request Pradeep to tell us a little more about Grand Thornton as an organization and how LearninGT is helping in solving the problem of imparting practical knowledge to our students. So, requesting Pradeep to take it over, please.
Thank you, Rohit, for the introduction, and warm welcome to everyone in the morning on the Saturday, as Rohit mentioned. So, as a Grand Thornton, I believe everyone knows about what Grand Thornton is, being in one of the advisory firm consulting taxation, providing services to hundreds of clients globally, and as we call ourselves as a truly global Indian global firm. So we in India, we are spread out in we have 17 offices and more than 9,000 people. And we are serving, you can name any of the clients to whom we are serving on the audit part, on the taxation part, on the digitalization part, on the technology part. We are providing all these services from across the offices spread out in India, and with spread out in more than 145 markets across India and 50 offices globally. You can understand the knowledge base what we carry as a Grand Thornton in itself, considering the revenue and everything being one of the things which we are serving is more than we are serving 43% of Fortune 500 companies as well. So the network, the knowledge base what we have, that makes us a truly global Indian firm. As in our LearninGT, as Rohit introduced, at Grand Thornton, we have started a very dedicated service line where we are training the people, the clients to whom we have been serving, like someone in the audit clients are asking for us to train their employees on the IFRS or on the new accounting regulations or on the NDS or on the GST part. So there we started this LearninGT arm, where we have already trained more than 16,000 people across India. We have developed multiple training programs. All these training programs are developed and designed by the team inside Grand Thornton only. These are based on the ACCAs or IFRS, financial modeling, the newest technologies like data analytics, compliance, blockchain. All these trainings we have designed within the GT team. And the delivery of these programs we do both for since we are serving three sets of markets. One is B2C, we are serving to universities where we are working to hire and train people. We are serving to corporates as well. So mode of delivery is primarily live online, and we do a lot of e-learning also we have developed for the working professionals as well. The sessions whatever we planned and designed are primarily based so that the any of the participants has a great ROI. They learn, So the basis the return on investment they're looking, we have designed the assessments of the program. We support them with the doubt sessions. We support them with the mock tests, so that there are certain papers like ACCA or CPA. These are the exam-based certification and global chartered accountancy certifications. So a lot of rigor is required. So we support participants with these assessments, mock tests, doubt sessions, and the world-class content support which we provide through our Becker and PPP content partners as well. As a Grant Thornton, we are committed to provide a knowledge which serves the society. As a Grant Thornton, our the motto is to let's make a vibrant Bharat as an organization. So we are here to design, to support, and each and every participants who are joining our programs. And this masterclass is specifically is designed where we will give you overview on the IFRS and on the financial reporting principles, which will let you know what is coming up in the market and what are the various new things which are coming up. This and the Kapil being one of the seasoned professional who would share details on the topics of the today. He is as just one thing which Rohit missed, that he has a credential of training more than 10,000 hours on IFRS primarily. So I think we'll request everyone to be there in the session to get a maximum knowledge from Kapil on these topics. Over to you, Rohit. If I miss anything, please add on.
No, absolutely. Thank you so much, Pradeep, for giving us so much insight in terms of what Grant Thornton is all about and what are the different solutions which are being offered to us. And a lot of people are not aware that how LearninGT has actually, been carved out from our existing solutions and the kind of good work we are doing in this space. So thank you so much for enlightening us with this. And I think just one thing with LearninGT, what we are trying to do at Grant Thornton and the kind of problem which we are trying to solve is that our core focus is in terms of providing the real life, learning experience to our users and to the learners which are coming up. So our focus is less on conceptual knowledge, more on the practical exposure, that how this knowledge could be applied within the the career you guys choose from. And that's the unique advantage which we at LearninGT are trying to deliver to all the learners who are coming to us, or all the university students, or anybody with whom our learning experience is. So now moving with this theme forward, I'll just request Kapil to tell us a little about the structure of ACCA qualification, and then take us deep into the IFRS and financial reporting principle, which is the forte of Kapil, and our knowledge to that per se is a little limited. So Kapil, requesting you to please take it forward from there.
Hi, good morning, everyone. So thanks Rohit, and thanks Pradeep. I think it's something which you have already shared with everybody regarding Grant Thornton and and all that what we are doing. Now on ACCA front, first of all, when we are here for a topic on IFRS, especially on financial reporting aspect, I can just talk about that why IFRS is important, and IFRS is one of the key factor why ACCA has got so much surge in their demand, right? And the reason was that where IFRS got applicable in India, right? Particularly when IFRS got or has been converged into a local form, which is Ind AS, the demand for ACCA in terms of ACCA diplomas, ACCA qualification, ACCA professionals, everybody got increased, right? So that something was the trigger for the demand for ACCA in India. Now, if I talk about particularly on the ACCA, that how ACCA is actually structured. If you, Rohit, if you just move to the next slide. So how ACCA is actually structured is that, ACCA is structured into, I would say, 3 pillars or 3 parts, which is basically known as applied knowledge, which is the base of, or I would say the basic part of it, which is the start of this, which covers 3 papers. Now, 3 papers are, one is business technology, right, which is accountant in business and business technology, that something is there. Second is management accountant, right, which is talking about mostly the costing and all of the stuff. And third one is financial accounting, which starts with the IFRS. So accounting being a core, right, so it comes in the knowledge level itself. Then again, it comes into the next level, which is applied skills level, where there are about 6 papers, right? And those 6 papers includes corporate law, performance management. The performance management, again, talking about the further on the management accounting, right? That how costing, which is the advanced level of costing and everything. Then it talks about taxation, which is majorly the UK taxation, and financial reporting. Financial reporting takes the takes the bit from what we have learned in financial accounting and move further on to that what extra do we have in IFRS and how we use IFRS for preparation of financial statements and everything. Then audit, something is which is very much part of any chartered accountancy qualification, right? And it again take some sort of understanding from financial reporting paper which has been covered before that. Then we have financial management. So all these 9 papers covers the first two parts of the ACCA. And once you are done with that, then you move to the final and the most complex side of the ACCA, which is the strategic professional level. There, the objective of ACCA is not to test your conceptual understanding only, because most of the times, those who try to study themselves see that there is no harm to study themselves. The only thing is that the ask in these papers, specifically in professional qualification, is very different. They are not asking you to give the straightforward answers on the conceptual understanding on whatever you have learned in first two parts. They test you that what will you do if you are a professional already. What would you do if you are working as a manager, right? And you are having a team who is working for you. What steps would you take when some problem statement comes in front of you? So that is how these are more case study based papers, and actually brings in or try to bring out a lot other than I would say just the conceptual understanding. So it is more based on the professional experience, practical aspects. Everything has been built, and ACCA has designed this particular section very carefully so that whomsoever is completing these papers will be directly ready to work in any of the in any corporate where they wish to work, right? So be it industry, be it consulting firm. So that's something is there in ACCA, and as I told you that IFRS playing a most important role in ACCA, right? Or in any case, accounting is always been important for any of the professional qualification, and being IFRS, it has given us a good demand, not just in India, but across the world, right? All the KPOs, all the BPOs, all the major consulting firms, all the industry partners, everybody is looking for people who knows IFRS, or I would say the somewhat Indianized IFRS, which is nothing but the Ind AS. We will talk about this in detail, right? So this is just about the ACCA piece. Rohit, I hope I have answered this. You can talk further on this.
No, absolutely perfect, Kapil. I think you have very beautifully explained the ACCA qualification, how the different levels are placed, and what are the expectations at different levels. Because a lot of people still think that ACCA is a very straightforward qualification, but the kind of requirements they have, as you rightly mentioned, at the strategic professional level, the kind of answers which are expected, or the kind of evaluation which is done by ACCA, that requires a thorough knowledge of the subject also, plus actually how that knowledge could be implemented in the workspace as well. That's where ACCA is judging, and that's how ACCA becomes a more complete qualification and a widely accepted qualifications by organization, not only restricted in India now, and across the globe. So thank you so much for this, Kapil. So now, before guys, we would actually be starting with the real masterclass, the subject area for us. I would quickly like to pause here and would like to take up any questions which are there by you. In case you guys want to speak up any questions or whatever we have discussed right now, you can raise your hand. We'll unmute you, and you can ask your questions.
So Rohit, one question which we have received in Q&A section is about how Grant Thornton has designed what this ACCA program in terms of when we are mentioning as a hands-on experience or the practical experience, and how this ACCA program is helping them to clear the examinations, multiple examinations. Since ACCAs have multiple papers, so how it is helping them, how we are helping them.
Thank you all of you, sir. ACCA exam is, for example, I am a chartered accountant, so ACCA exam has to be conducted or given again by me, or this is the there is any exemption for papers in this, or ACCA is being organized by GT Bharat itself?
So Kapil, would you like to answer this?
Yeah, I think thanks for answering, or thanks for asking this question. As you have asked that being a chartered accountant, so something we are definitely going to cover, or definitely going to talk about this also, that there are different routes for ACCA, and ACCA actually given its due respect to each and every qualification. So, for example, you are coming as a chartered accountant. They know that you have mostly covered everything, right? Which was there in first and second part, which was knowledge level as well as skills level. So there, as I mentioned, that it talks more about the conceptual understanding. So they are aware that you have already gone through everything. So they are giving due respect, and they are going to give you the 9 exemptions. Means you don't have to go for those 9 papers again. But what they are looking for, that the program which is, or the papers, last 4 papers which were in or which are in the professional level paper, is to check that what would you do when you are a professional, right? Because these are designed only for professionals. So they are going to take only those 4 papers. So means you are required to sit only for those 4 papers, and once completed, you will be through with ACCA. So you are going to get the exemptions, and similarly, that exemption route is available to other qualifications as well. For example, that is available for BCom, that is available for somebody who is just a CA inter also, right? So they are giving due respect to each and every qualification and whatever you have gone through already. And one more question was there as part of it, that so I would say that we are doing, or we are helping students to complete ACCA. We are not conducting these exams. These exams are typically conducted by ACCA itself. And again, considering that the level of toughness, level of understanding is being set by ACCA, so that it is common for everyone around the world.
Okay. Thank you, sir. Thank you.
Thank you, Kapil. I think in the chat box, we also have a couple of questions. One is with respect to the duration, the different exemptions which are available. So this we would be covering in the later half of this masterclass, in terms of what are the different exemptions which are available depending on your current qualification, what are the number of exams you want to give, and how the entire structure is. So this entire section of 15-20 minutes would be covered at the end of the masterclass. So I just request everybody to stick till that part, and most of this would be answered, because I can see there are a lot of questions which are coming with respect to exemptions depending on their current qualification. So there are exemptions available for BCom, MBA Finance, CA Inter, fully qualified chartered accountant, and other professionals also. We'll share all these informations in the later half, please. One question is with respect to Mr. Prabhu Narayan, who comes with over 2 decades of experience in capital market and investment banking, and currently is into fund administration in a leading bank. So, Kapil, any thoughts how ACCA can help in his further career development? I think this will be one helpful for a lot of people.
Sure. So, Prabhu, thanks for asking this question, and it is very relevant question when we see that somebody coming from the capital market investment banking side, and how they are going to move towards the accounting side. So I just answer it in this way, that ACCA is based on, or every professional qualification of this type is actually based on 4 pillars. One is accounting, one is auditing, one is taxation, and the 4th one is typically the financial management and the performance management, which is the costing and financial management, which you are already doing. Now, thing is that how ACCA is going to help you in that. So generally, what happens is that when we talk about a professional qualification, adding a worth right on the CV, that you have gone through all those aspects along with whatever you are doing in terms of arrangement of funds, helping clients to get the funding and all that thing. You may also be aware that what is going to happen when these funds are coming to the business, how they are going to reflect on the businesses balance sheets, or how they are going to utilize. So there are a lot many things, because they need to submit reports before raising the funds. So how those reports are being prepared? You have seen a lot of IPOs have come recently, and they have backed off also at times because they were showing losses earlier, and they had to come back again by bringing some sort of or by answering some sort of questions being raised by regulator. So those things were happening. So once you understand those concepts, it will be helpful for you to having a, I would say, the 360-degree understanding on the business aspect, that why they are looking for fund, what could be the reason, what are the growth plans, how they are going to utilize the funds. It at times it is more of a business thing, but at times it is more of a financial aspect also, because they are going to be judged on their financial performance later.
Thank you, Kapil. Thanks for answering this. I think we still have time to just quickly push for a couple of more questions. So I think one question from an anonymous attendee is that post completion of ACCA course with Grant Thornton, do we get an opportunity to attend the interview with Grant Thornton? I think this is one of the very relevant questions which comes to a lot of, in mind of a lot of prospects who come and reach out to us. So guys, I'll happy to share this. So point number one here is that Grant Thornton has a unique distinction of being a gold approved learning partner of ACCA and an approved employer as well. And that's where one of our USP also lies. While we are training a lot of individuals, we do see future employees in them as well. And to deserving candidates, we are providing internship and placement opportunities as well. And there are few past candidates with us who have studied with us and already working with Grant Thornton in various domains. So yes, there would be placement and internship opportunities for the deserving candidates. There are certain criteria which one needs to fulfill. They need to complete a certain number of papers. They need to clear our internal interview rounds, just as like the normal procedure any employee or a candidate goes through. So if you fulfill that criteria, we are more than happy to give you different kind of opportunities, and we would love to be you to be part of the Grant Thornton family and helping us delivering our various solutions which we are doing to the clients.
So Rohit, I just like to add one thing onto this.
Yeah.
Right. I think again this is one of the tough question we always get to hear from everybody who attend such kind of seminars, webinars, master classes, right? And I say that our rejection ratio, and it is not just ours, but all the big consulting firms have a very different rejection ratio as compared to industry, right? We hire very few as compared to the number of interviews we are having. So one, of course, we will definitely put people through through the interview processes and everything. The only challenge that comes is that there the interview has to be cleared by you. So for that, what we are trying to do, differently, right? Those who are passing papers from us, right? We have recently started this, and we have found that this is something, the gap was there. We recently started that people, mostly the students, right, were not having understanding on some of the tools like Excel even, right, or financial modelings or Power BI and all other stuff. So we thought to come up with the solution for this, and we started giving them some sort of learning that you have completed ACCA. Now there is additional thing which you may require, because ACCA in itself, as I told you, that these are based on 4 pillars. Tech is somewhat is missing in those 4 pillars. They are there in the qualification, but not in that detail. ACCA doesn't talk about the hands-on for this. They say that you should learn. Now, what we decided that to bring that into practicality, we have decided to come up with an option that if you are doing ACCA with GT and completing any of the paper, we give option to students that come and do those tech programs free of cost, right? Why and what would be the benefit to us? Because I want that everybody should clear that interview, right? And when we are doing that, we have observed that a couple of people have cleared the interview just going through some of the programs. It was easy for them, right? So that's something we have tried to do. Right?
Thank you, Kapil. We have some other questions also coming up, but with time constraint, let's quickly take up one last question and then we can take that up. Kapil, so the question was that being a chartered accountant, whether one should opt for IFRS or ACCA as a qualification, what should be the choosing criteria?
So I would say that again, this is more of a personal aspiration at times. If you are just looking to to add a skill to your to the thing which you are doing, there are a lot many people who have done IFRS. I would say in lakhs who have done IFRS in past, because that is something which is required, so that you should definitely go for. However, ACCA brings in more of a, I would say, everything in that bucket and adds another qualification for you. So, for example, if somebody from UAE wants to give work to you, or if somebody from UK wants to give work to you, they may not just look at that, are you having the IFRS qualification or not? They may see if you are ACCA, then of course you may have that understanding with you, right? I hope that answers your question. And one last, I would say, most important thing which I see in the chat box is age the limit for this? I think, thanks, sir. Thanks for attending this. We are glad that you have, you have given your time on Saturday to us. Age is not the limit in this qualification. You can still go for the same. And I have seen earlier that people at this age have done that. Being a student, we have, I would say, I have learned a lot from those students. That the experience, that what exactly been happening. We can just tell you that how ACCA is going to going to play a role in future, but the experience you carry, I think that will make us learn a lot many other things.
Thank you so much, Kapil. I think we still have a couple of questions coming up, but we'll park that for a separate window. So guys, thank you so much for, and that is the whole objective of this masterclass, to be as interactive and engaging as possible. I think after the section which Kapil takes now, we would have another Q&A session, and post that, then we will also discuss how Grant Thornton can support you in your ACCA journey, and a lot of questions which are being posted right now should be answered in those sections as well. So we'll have those two windows for another round of Q&A. Kapil, now I request if you can share your screen and then take us deep dive into the core topics which we have for today's masterclass.
Sure. Okay. So thanks a lot, Rohit, Pradeep, for giving us insight on ACCA. I think we are now on our main stuff, which is presentation of financial statement. But I need to give the overview of IFRS, that what exactly IFRS is, right? And how it is different from the local GAAP which we are having. You may have fair idea, right? That what exactly and how exactly been IFRS been implemented in India. But I'll quickly give a background so that everybody is on the same page, and we can then talk about that why it has become so important for us to learn IFRS. That is what some of you were asking. So what is IFRS? Right? It is nothing but International Financial Reporting standards, right? Mostly the accounting standards which we are having. Now it is international, it is global, right? Everybody is following that. It is being followed, I would say, globally, right? Except some of the countries, some of the big countries, I would say US, right? US is still following US GAAP, right? Now that US GAAP is more focused towards the US market because they come up with the rules and because of some sort of fraud which which they have seen in past, so they are still following US GAAP. Whereas in India, what we are doing, right? In past, we used to follow IGAP, right, which is Indian accounting standards, right? It was for all, all companies. However, what has happened recently means that few years back, right, from 1st April 2016, India has actually moved into the ask was quite old, right? It was not just started in 2016. It was started back in 2005 or 6, right? Where India was discussing the option to move into the global accounting standard. The reason was very simple, that since we are going global, right? There are a lot many global companies are coming to India, right? Setting up their shared service centers, setting up their businesses in India. There was a need for us to to follow something which everybody else is following globally. So that time there was discussion started happening that we should go global in terms of our accounting also. So there it got implemented from 1st April 2016, right? India has moved towards IFRS or implemented IFRS. I would say the Indianized version of IFRS, which we now known as Ind AS, right? So it was started in 2016 in phase manner, right? Phase manner was all companies which are 500 crores plus net worth started on 1st April 2016. But now what is happening? All companies, right, I would say, except, so there is still a chance, except banks and insurance, because insurance companies doing it now from this year. Banks are still to be, still to implement that. So insurance companies are doing that, whereas all companies, including NBFCs, right? So we are talking about current situation. All companies, including NBFCs, which has net worth more than 250 crores. So any company which is having net worth more than 250 crores would be following Ind AS. Any company which is listed in any of the stock exchange, BSE, NSE, or any of the stock exchange, they again are following listed, even though their net worth is less than 250 crores. So that something is the position right now, and that is happening with all the NBFCs also. All other companies, which is not listed or not having net worth beyond or of 250 plus, they are still following IGAP, right? But it is not mandatory for them to follow IGAP. They can still follow Ind AS if they want to. Means it is voluntary for them. If they wish to, they can still follow Ind AS for their companies. Now thing is that, as I said, that because of this, that companies have started following Ind AS. Now what has happened when companies started following Ind AS. When Ind AS, been implemented, started implementation from 1st April 2016, demand for people who knows Ind AS or IFRS has started increasing, right? And there was, and that time, the ACCA came into picture because there was only one qualification which was having IFRS in their curriculum, right? So that something was there. Now, how ACCA actually takes care of IFRS? So when we talk about Ind AS is nothing but, I would say, 98% of IFRS only. There are only 2% changes which are there. 2% we call it carve outs. Those carve outs are typically being kept considering localization, because some of the industries are still have some sort of regulations issues, some sort of industry challenges. Because of that, right, those 2% changes are not yet been implemented. Rest of that is almost very, very similar to IFRS only. Now, thing is that where all IFRS is being taught by ACCA. So if I talk about ACCA qualification, right, though I am giving you the fair view that how exactly it is going to make a difference and where exactly you should get the benefit more out of the ACCA qualification. So in ACCA, there are 3 papers which talks about IFRS. First one is in the knowledge level. We call it financial accounting. This covers basics, very, very basics. So this is knowledge level. This covers very, very basic of that how balance sheet has been prepared, what are the rules of accounting and all that stuff, so that you have the base for the accounting thing. But the accounting is somewhat coming out of the ACCA piece. The IFRS piece. Then we have skill level, applied skill level. There we have paper called financial reporting. Now in this we do some sort of deep diving into I would say into the financial reporting concepts, into all the accounting standards which are covered under IFRS. So that's something we cover in here. Then finally we move into the same in the professional level. In professional level, we have a topic called strategic business reporting, SBR, strategic business reporting, which talks more about that being a professional, how you take care of all the issues and everything. And that something is being covered. Though they assess your conceptual understanding, but they give you the practical aspect or practical case studies which you need to answer. Right. So these are something which are covered under the ACCA qualification. But apart from this, ACCA also has something called ACCA diploma in IFRS. In this diploma IFRS, this only talks about IFRS concepts. Right. Now, why we are talking about this? Because this ACCA diploma comes somewhat between skill level and professional level. It is not completely the professional level, because it is not talking about that being professional, what steps would you take. So it covers bit more than the financial reporting, but lesser than the professional level. So it sits in between. So that's why the ACCA qualification being I would say, or having a more weightage in terms of that what we are talking about here. So that something is all about where we cover the IFRS. Now, if I just talk about what exactly is being covered under IFRS, right? When we are talking about IFRS doesn't mean only the IFRS accounting standards. It includes IFRS standards, right? So in IFRS, you may find there are different accounting standards which are being named. So which starts from IFRS 1, first time adoption of IFRS, to IFRS 2, share-based payment, and so on, up to IFRS 17, which is insurance contract. So from IFRS 1 to IFRS 17, there are 17 IFRS standards. It covers all those accounting standards, all those reporting standards. But it is not just covering these, it also covers IAS. IAS means International Accounting Standards. If you are a student of any of the paper, IFRS, financial reporting, SBR, or diploma in IFRS, you would always get confused that when we are talking about IFRS, why it is covering International Accounting Standard also, right? So IFRS doesn't mean just IFRS 1 to 17. It means it includes IAS 1, IAS 2, IAS 7, and so on. There are some standards missing because that has been replaced and changed to IFRS and up to IAS 41. So that something is there. Okay. Plus, apart from this, this also covers some sort of guidances. In India, we call it guidances. In internationally, they call it interpretations. Now, these interpretations are in the form of something called IFRS, right? International Financial Reporting Interpretation Committee. So these IFRS are also there. IFRS 1 to IFRS 18, right? So all these IFRS are also collectively being part of IFRS. And these interpretations are also being covered as SIC. So SIC 1 to these means this is also known as interpretation only. So standard interpretation committee, the same way we are having IFRIC. Why it has, why we have, different nomenclatures being used. So reason being that IFRS came into place in 2003. But before that also accounting was happening. So before that, there was a separate body which used to, give the IFRSs to the industry to follow. That was International Accounting Standard Committee, which got replaced by International Accounting Standard Board, where the name got changed. They kept the older standard as it is and started adding all new standard as IFRS. Because of the same, right, we got all these, different nomenclatures, which are getting used here. So when we talk about IFRS, so first and most important thing, we are talking about all these IFRS, IAS, IFRIC, SIC. That's something together form up, form accounting standards that is known as International Financial Reporting Standards. So we are going to talk about all these, means we are going to cover all these when we are covering IFRS. So that something is very, very, very important for us, right? Because at times we get confused in IAS and IFRS itself, right? So this was all about that. What is IFRS? I already told you about that, where we are in terms of IFRS implementation in India, right? We have already implemented that in the form of Ind AS. How we are different? I'd already told you that, right? We follow two gaps here, Ind AS as well as IGAP. IGAP being followed by somebody or some companies which are less than 250 crore or not listed. But it is again voluntarily. They are following voluntarily. Otherwise, they have a choice to follow any of the accounting standards. So this was all about the basics of it. Now, if I just move on to our slide deck, which we thought that we can use for this, what goes under presentation, right? This is the first topic of IFRS also, which is coming out of IAS 1. If we talk about in India specifically, when we talk about the presentation of financial statement comes from, right, in India we get the guidance from Companies Act. We call it Schedule 3. So Companies Act Schedule 3 gives us the guidance or the template that how exactly our financial statement should look like. Means every company's financial statement should look like. That is happening in India. Whereas globally, we follow IAS 1, right? And that's something, I have taken here. So when we have to prepare our, I would say that those who like to answer, please keep writing in the chat option. So we can try and make it more interactive to make sure that it is not the one way, it is more of that if you like to ask any question, so we have that kind of interaction in place. So when we're talking about presentation, what financial statements do we prepare? What all do we prepare when we are talking about financial statements? What is required to be prepared when we are talking about financial statement? If you are looking at financial statement of one of the company, what all do you see, right? What all do we see? There are 6 things which we cover, right? I have written 5, but there are 6. That something is coming in. So one is balance sheet, which we prepare, right? Some people are calling it statement of financial position, right? So you can call it statement of financial position, but it also allows you to call it balance sheet, right? So statement of financial position has been given by the Companies Act as well. Means Companies Act has actually asked us to call it balance sheet. The name is statement of financial position in IAS 1. Then we have statement of comprehensive income. Now, why comprehensive income, right? What do we mean by comprehensive income? We have always seen income statement, right? We used to call it income statement, but we are calling it comprehensive income, not just P&L, right? So why we are calling it comprehensive income? Because now this comprehensive income considered 2 parts. One is profit and loss account, and another one is other comprehensive income, right? This is something which was new for us, right? Though it is not any more new for large corporates, as I already mentioned to you that it's been 7-8 years now, right, for them, in following IFRS or Ind AS, right? For them, it is not new anymore, but it was new. What is other comprehensive income? That something is being part of the statement of comprehensive income. Then we have statement of cash flows, right? Now, statement of cash flows cover mostly all the inflows, outflows of cash. That something is there. Now, inflows, outflows of cash typically been recorded on the cash-based accounting. We are not following the accrual-based accounting like what we are following in balance sheet and statement of comprehensive income. So that's something we don't do. We are following the cash-based accounting system here. Then we have statement of changes in equity, right? Statement of changes in equity. What is statement of changes in equity? If anyone can tell me, what do you mean by statement of changes in equity, right? Maybe anyone like to answer. Meanwhile, I'll just write the 5th one. Notes to accounts. So these are the 5 important things which we which we typically cover when we are talking about the financial statement, and this is something which we need to prepare. So we were not aware earlier, right? We were not aware of other comprehensive income earlier, and we were not aware of this thing also, statement of changes in equity. So what statement of changes in equity actually represents? Anish, you have mentioned that detail of shareholders and their changes of statement. I think that's something, yes. Shelja. So how shareholders wealth is changing. Now, what belongs to shareholders? Shareholders actually have the holding of equity. Now, equity doesn't mean only the share capital. Equity means everything which comes under the equity, right? That includes share capital, share premium, reserves, retained earnings, right? Everything which could be, which could be there in equity, right? Any other reserve, ESOPs, everything comes here. And what we figure out in this case, we figure out that how these things are changed from opening of the period. Let's say if I talk about this year, from 1st April 2023 to 31st March 2024, which is closing of the period. We like to show that being a owner, being a shareholder, how your wealth is changed or how your net worth is changed from here. Thanks. So this is something which we are referring to, that how it is changed from opening balance to closing balance. If I, being a shareholder, let's say today I have bought Reliance company shares, I would see that what was the net worth of the company at the shareholding or at the statement of change in equity in the beginning, and what is there today. That actually defines that what being a shareholder I am getting. So that something is very, very important for me, right? And last one is notes to accounts. Notes to accounts cover majorly all the details of everything which we prepare in balance sheet, profit and loss account, cash flows, and everywhere. So that something is there. So shareholders' wealth actually being compared with the market price. But when we are talking about net worth is being considered from the book value, right? So basically, it may not exactly be the shareholders' wealth, but what exactly? So equity is actually carrying a risk, right? So basically, risk in itself. So it may go up and down, but it may also be driven from the market's perspective. But what I hold in company today, if company pays off all the debts from the assets, whatever is left, that is for the shareholders, right? So when I talk about wealth, I mean the net worth of the company, right? From the balance sheet perspective, not from the market perspective, because there may always be a case that market may be down also, right? Whether that been considered here or not, that is again definitely being a from a market perspective, you may always see that what kind of option we are having there, right? But from net worth perspective, yes, that is something which is the case. So as per accounting standards are one request I also have, when you are writing chat, I suggest keep everyone in loop, because I am getting the only questions where everybody else might not be getting the questions which you are posting. So post to everyone, keeping everyone there, like in two options, so that everybody can see that. As per the new accounting standard, I would say as per the new Companies Act requirement or as per the guidances, every company is required to follow statement of changes in equity, right? That is must. As I told you that these are the 5 key elements you cannot ignore. You have to prepare that. That is mandatory, right? So notes to accounts cover all these things. And as I said, there is a 6th one also, right? Which again is very new for us, which we call third balance sheet, right? This is the third balance sheet. Again, a very new thing for us. What is the third balance sheet? So third balance sheet, what is third balance sheet? So third balance sheet, if anybody is having understanding on the third balance sheet, what we do when we are preparing our balance sheet here, let's assume this is the format for balance sheet which I am taking. Let's assume balance sheet for ABC, right? Balance sheet for ABC for year ending 31st March 2023, right? Now, if I am preparing balance sheet for someone for 31st March 2023, I'll show assets, I'll show liabilities, equity. Which all periods I'm going to show for 31st March 2023? I'll show period which is 31st March 23, means current year. But I'll also show the period 31st March 22 as comparison, right? So this is current year, this is previous year. That's something which we do every time. But IFRS says that in some circumstances, this is third balance sheet, not every time, but only in few cases. Now, what are those few cases? Third balance sheet will always be prepared, which is nothing but opening of previous year, which is 31st March 22 was the previous year. So opening of previous year would be 1st April 21. So I'll prepare 3 balance sheet, one for this year, one for this year, and one for this year. Now, this is not prepared every time. It is only prepared when and only when you have any of these. For example, following or changing accounting standards. For example, you have moved from one accounting standards to another accounting standards. You were following IGAP earlier. Now you have implemented Ind AS. So the moment you have implemented Ind AS, you will prepare financials for this year, previous year, and opening for previous year. That is the first thing which we do. The second, whenever you have change in accounting policy. Let's assume anything has come new. Let's assume the new revenue related accounting standard has come, which asks you to change your accounting policy, that the new way of recording the revenue would be applied. Or new accounting standard on leases has come up, which asks you that this year the accounting would change and you have to apply the new policy. In that case also, you have to prepare. So I'll prepare I'll prepare this thing also. When I change, I apply a new accounting rule for something, new accounting policy has come up. And third one, if I have any prior period error, means if there is a correction of error which is required. For example, any fraud has happened in 2017. I got to know in 2023. Now I can't go back to 2017 and correct it. But what I am required to do, I am required to prepare the third balance sheet. So this third balance sheet would only be required if any of these three cases are there. Change in accounting standards, accounting policy change, or prior period error has come up. In those cases, the sixth element will also be applicable. Otherwise, we are required to follow only and only these 5 elements. Okay, that's something which we, right? That's something which we follow, right? And it's important for us to know all these rules and guidances. Let me just show you that how this is Mahindra's and Mahindra's financial statement. I hope you are able to see the screen. This is just 2 years balance sheet because they are not changing it right now. But if you go back and check, right? If you go back and check 2016's financial statement of Mahindra and Mahindra, you may find that they are prepared 3 years financial statement. Now the balance sheet look like this. We will come back to this also. But I just want to show you that how exactly they are showing their P&L and other comprehensive income. They have prepared statement of profit and loss account, which includes other comprehensive income also. It is not just talking about the profit and loss account only, because you can see the profit for the year has been calculated here. But after the profit for the year, which is after tax, profit after tax, after profit after tax, we have got other comprehensive income also, right? So that's something I thought to share and show you that why companies are showing other comprehensive income, which is generally known as OCI. When you go FR or SBR or diploma IFRS, you will get to see that you have to prepare this when you are preparing financial statement or statement of comprehensive income, or in India, statement of P&L, right? So that's something is very, very relevant. Now, does anybody know what is the meaning of other comprehensive income? Okay. Kanika has mentioned foreign exchange translations, not directly related to business operations, income from non-core business activities, okay, that have not yet realized, okay, transactions which are not influenced by business decisions, revaluation gains, and everything. Now, when we say comprehensive income, of course, we are referring to the business as a whole, right? Not just talking about operation, operation related income or expenses only. We are talking about business as a whole, right? So now, when we are talking about the entire business, you need to consider all those incomes, all those expenses as well, which may not have, as you rightly mentioned, the operating income or expenses. That is one. But you may also say that interest, is it operating? Do we include interest expense as operating expense? Does it comes under operating expense? Answer may be no. But still, that interest expense being a part of profit and loss, right? Being a part of profit and loss account, right? So what exactly or why exactly other comprehensive income was being created? So it says there are there are some items which makes financial, or I would say P&L, vulnerable because of movement they have. Let's assume I have a building, office building, purchased for, let's assume 10 crore. Today, market value is 20 crores. Is this good for me or not good for me? Is it good for me? Of course, it's good for us. It's good. We have got additional value of 10 crores. But can I use this value anywhere? Can I use this 10 crore anywhere? This is just a value which I have got because my office, sorry, I'm sorry, because the value has gone up. But can I use it anywhere? This is just a notional income, right? But if I include that in my profit and loss account, somebody may feel that I got the profit of 10 crore. And their decision to invest in the company or not to invest in the company, to give me loan or not to give me the loan, to give me credit or not to give me the credit, everything would be based on that. So if I do that, then it can change somebody's decision. That is one of the reasons it says those items which are mostly having the fluctuation up or down, but may not have the financial impact sorry, the realized financial impact on the financial statement. In those cases, how would you treat those? So for them, there is a separate statement has been prepared, which is known as other comprehensive income. Not everything goes there. There are only 4 or 5 items goes there. So I'll quickly name those ones so that we get the understanding. And this is something how we find out if any of these are there. Only then OCI will be will be prepared. Otherwise, means item would be there in the OCI. Otherwise, nothing would matter. So the first one, when we have revaluation gain. So whenever we have revaluation gain means that gain or change in value of non-financial asset, particularly the land, building, plant, or anything. Generally, companies don't follow revaluation thing a lot. They don't consider revaluation a lot in the financial statement because that something is again allowed, not allowed. So how you treat that, that something has been kept in separate accounting standard. But revaluation gain, if company is following, it will come in the OCI. Second, gain related to fair value change of shares which are held for long term. So we call it financial instrument or financial asset kept or valued through fair value through OCI. That is a separate name for that. But for simple terms, for those assets which are being kept for long term holding, any change in the value comes, that will be that will only be taken to the OCI. For example, Tata Motors acquired Land Rover Jaguar. I am again taking a hypothetical number. Let's assume they acquired these shares at 10 rupee per share, right? But today, let's assume value is 90 rupees per share. There is a change of 80 rupees. Now, what is the intention of Tata Motors? Will Tata Motors sell those shares? How about losses, Ashish? Ashish has mentioned about losses. So losses goes to P&L. This is a bit surprising. Gain goes through OCI, losses goes through P&L. There is a model for that you were having gain earlier or not. If gain earlier, then losses will be taken to OCI first and then to P&L. So the logic which IFRS is giving that gains are notional, but losses are real. So losses take to P&L, gains take to OCI. Right? So that is one of the reasons which are there. But here, gain or losses both. So if the share price of Tata's share from 10 rupees to 90 rupees has happened, Tata doesn't want to sell it. Tata wants to keep it. Tata has purchased Land Rover Jaguar for some other reason, not for this reason. Then in that case, this can impact the financial statements of the company for no reason. So for that purpose, it has been kept here. Third, gains or losses related to actuarial valuation. We call it actuarial gains or losses. Who is actuary? Any company, when they are deciding the provident fund, pension fund, gratuity and all that stuff, for that they use the actuarial services. Actuary is somebody who decides that how much value should go to the pension fund and all. They come up with the scientific formula and everything, keep giving the numbers, and that numbers be taken to taken by the companies. That is mandatory for everybody. So if anything goes up and down, that gain or loss comes here, because again that is every year story. keeps going up, keeps going down every year now and then, right? So that is one of the reason, again, it has been kept out. Then cash flow hedge. Hedging, when companies try to cover themselves against any kind of losses related to fluctuations or everything. If they are covering, then those hedges will come here. And the last one is that forex translation. So whenever somebody has mentioned this earlier also, whenever we have acquired any company which is a global company, and their numbers will not be, for example, Tata Motors acquired Land Rover Jaguar. They are sitting in UK. We are sitting in India. But Tata Motors has to consolidate the numbers in the next year for reporting purpose. They will give their UK numbers. We will have our India numbers. Can they be merged? No, because INR and British pound can never be merged, having a different value. For that, they convert the numbers and give it to us. When the conversion happens, there is always a difference which comes up because of certain rules which are there in the accounting standard. Now those rules gives a balancing figure. That balancing figure also sits in the OCI. So OCI always have only 5 of these items. So that is the only thing which goes. If you see here also, you may find that these are the only 5 things which are there. One, remeasurement of defined benefit plan. It is nothing but the actuarial gains or losses. Equity instrument through other comprehensive income. I was referring to shares held for long-term purpose. Then you have debt instrument, again investment through long-term purpose. You can see hedging, right? So that something is there. So these are the things which can only go. Fair value, they might not be following. That is one of the reasons which is. So only those 5 items goes to other comprehensive income, nothing else, right? So we have seen what we have is balance sheet, P&L, OCI, then we have cash flows, statement of comprehensive income, right? I'll just go back here. Statement of comprehensive income, statement of cash flow, statement of changes in equity, notes to accounts, and third, balance sheet, whenever it is required to be prepared, not every time. So that's something which we do when we are referring to this. Now, if I just go back to my presentation, which I just started, but were not able to go through that, right? Why the presentation is important? It says why the logic of the template. What could be the logic of for Companies Act Schedule 3 to provide us the template? What could be the logic of IS1 to give some guidance related to presentation of financial statement? Why we are covering that these 6 things are required to be prepared? What could be the logic? Anybody? Why are we preparing this, or why we are discussing this anyways? Any thoughts? By the way, these can be the questions if you are going through ACCA, right? These can be the questions which can definitely come in your in your exam. So Anish Pandey, I think that is the one thing that they want: consistency, uniformity, right? So if they don't give the template, what will happen? Somebody will make balance sheet in T shape, somebody will make balance sheet in different style, somebody will have assets up, somebody will have liabilities up, somebody will start with equity. Then there would be a lot of confusion, right? Because we may understand the financial concept, we may still go and figure out that what they are trying to say. But think about the investors who may not be coming from the finance background. If they have to go through it, they need to look at the information by a single lens, right? That asset here, asset here, asset here. What is the difference? Liability here, liability here, liability here. Profit here, profit here, profit here. So 3 financial statements given to them, they can compare easily. Otherwise, it will be very difficult for them, and they will never be able to find that. So that is one of the reason, right? As I said, that it is important for us to bring in the uniformity in the accounting thing. What we were discussing, we have discussed this thing, that all these are required to be prepared. Balance sheet, P&L, OCI, statement of change in equity, cash flows, notes, and the third balance sheet, which we have already discussed. Apart from this, right, companies annual report will always have lot many other information. So, Ashim, companies which are following IGAP, now because, because Schedule 3 of Companies Act for IGAP statement also includes that, right? So for them also, right, when Schedule 3 brings in a requirement, there you may require to follow, right? So Schedule 3, whatever guidance is that is coming under the IGAP, because Schedule 3 also has two set of Schedule 3 now. One for those companies who are preparing Ind AS, one for those companies who are preparing IGAP, right? So that is something which we need to follow. Okay, coming back to this. So companies' annual reports consist of lot many informations. For those who have not seen any annual report, you can see that annual report started from means this balance sheet started from somewhat page number 290, right? It means there are pages from 1 to 290 which are still been given for lot many other informations, right? So you can see lot many other information related to audit report, audit committee, what company is doing in the corporate governance, what company is doing in sustainability, and everything. So that all information is there. So that all information companies prepare basis what they are doing. How companies wants to disclose considering the other regulatory guidances, right? But not from IFRS guidance, right? So sustainability reporting, all other stuff which are there. However, the guidance from IFRS has also come on sustainability reporting. I don't know if you have heard of, there is a new standard S1, S2, which has come, right? Which is now going to be followed by the company in future, which is not mandatory right now, that they are going to follow the guidances on S1, S2 on sustainability, ESG, right? And that something will be the guidance for this. It will come into the curriculum soon, right? So that's something we have to prepare for, right? Now coming back to this, all these information companies preparing basis that the business which they are carrying out, basis what chairman is trying to say, basis what they are trying to analyze, and showing that how we are different from others. There, the IFRS is not applicable. The IFRS is only applicable to the balance sheet, P&L, cash flows, those 5-6 things which we have discussed. Okay. So the first thing which is the balance sheet, and how balance sheet is being prepared. And balance sheet is always been prepared keeping the separation of current versus non-current. Now you can see in the Mahindra and Mahindra financials also, the separation is clearly mentioned. Current assets, non-current assets, current liabilities, non-current liabilities. That separation will always be there when we have to prepare our financials. Any logic behind current and non-current? What could be the reason for current and non-current? It is very simple that yes, current non-current is required, but at times it becomes very difficult for us to analyze in some of the typical cases why something is being recorded non-current or current, where or what kind of guidances we should use for that. So any logic why non-current current difference could be there? Okay, if I just ask you what exactly is required to run the business? Capital, of course. But what required to run the day-to-day activity of the business? Cash. or we can call it working capital, right? Now, when we talk about working capital always come from current assets, right? Let's assume today I want to start the business, right? I raise 100 crore from the market and entire 100 crore I invest in property. Let's say plant. I purchase the plant for 100 crore. Do I have funds to run the business anymore? Again, I have to go back and ask for more funds for working capital. So for running the business, I need to have the working capital. I need to know that how much liquid I am in terms of the assets or liabilities, so that I can decide that how quick or how far I can go in my business in terms of the assets or liabilities I am having, in terms of current assets, current liabilities I am having in the books. So that something makes it very relevant, and that current and uncurrent bifurcation is very, very important. I have seen, I have shown you that what is current asset, what is non-current asset, what is current liability, what is non-current liability. If you can just give a view, one aspect which you have given is 12 months period, right? And this is the one aspect which we use every time, right, to see that. But the issue is that is it every time the same, right? So we say that something which we are going to consider current, that is something which is coming within 12 months of time, or maybe the cash has always been considered current, right? Or anything which is kept for trading purpose. For example, inventory, if it is held for trading purpose, even though you may utilize the inventory for more than 12 months of period, right? I give you the example. Let's say what liquor company does. Any liquor company, right? We may see that the liquor stock held with the liquor company is not just for 1 year. They put liquor in the barrel for year, 2 years, 10 years, 20 years, depending on that what age of liquor they want to produce, right? Now, is it going to be realized within 12 months of time? Can we say that the bottle which they are planning to sell at after 20 years period, can this be realized within 12 months? Answer is no. But the reason is that they are preparing something for trading purpose. For that reason, it is going to be kept as their inventory in the current asset, even though it is going to get used after after long term, right? The other thing is that it should also follow the operating cycle. What is operating cycle? The cash cycle. Purchase to realization, how long the operating cycle is. If the operating cycle is lower than 12 months, of course 12 months period is getting used. Now coming on to the liability side, we follow the same concept. 12 months, normal operating cycle, held for trading purpose. But the only thing which comes here is this, the last point. No unconditional right to defer settlement for at least 12 months period. What exactly this means? Let's assume company has taken a loan from bank, right? Company has taken loan from bank, let's assume 5 crores. Today is 31st March 23. Let's assume we are talking about one date. This loan is due in 5 years. Is this loan current or non-current? How should we treat this loan? Current or non-current? How this is going to get used, current, how this is going to get seen? Is it going to be current or is it going to be non-current? Somebody has mentioned, or I think we have got the answer. Everybody is saying non-current. Of course, this is non-current, right? Now, thing is, if I change the situation just a bit, let's assume this debt comes with a covenant. Covenant means condition. Condition says if your working capital ratio or current ratio below 1:1, right? If the working capital ratio or the current ratio comes below 1:1, this loan become payable immediately, right? Now, thing is that the moment working capital ratio comes below 1:1, this loan becomes payable immediately. Now, let's assume on 31st March 2023, the current ratio of company is 0.9:1. Is it below 1:1? Answer is yes. When it is below 1:1, can bank demand the loan now? Can bank come and demand for the loan? Yes, anytime. And if they demand the loan anytime, as per the condition which is mentioned, is company liable to pay the loan at the same time? Yes. So company is liable to pay because bank is liable, means bank can demand the loan. So if that happens, then as per IFRS, again, I am talking about as per IFRS, not as per Ind AS. As per IFRS, this loan becomes current, even though the earlier statement was saying that it is due in 5 years, because bank can ask. I am saying can ask. Bank may not be asking this right now, but bank can ask, because actually you are at default of this condition. So bank can ask for this kind of thing, and this loan may become current. So that is one of the typical condition I am talking about, why the current and non-current bifurcation is very, very important. And if this loan becomes, right, this is covenant breach. Exactly, Anish. So when there is a debt covenant breach happens, then bank can ask for this. In India, right, there is still option in Ind AS which says that you have the option, you have the period to fix that breach, right? There is an option to fix that breach, right? If you fix that breach in India, you can still consider it non-current. But in IFRS, if you are not fixing that breach on 31st March itself, right? If it goes on 1st April and you are going to fix that breach, or you are negotiating with the bank, if the negotiation happens on 1st April, it will still be current. But in India, for Ind AS, if you negotiate in some time, the time period being given by means time period up to your financial statement is getting prepared, so you can still consider this as it is not contingent, Raj. We are not going to consider as contingent, right? We are considering that whether it is current or non-current, we are changing the classification of the liability, right? So that's something we are talking about. Now, classification would be changed basis that what exactly or how exactly you are, what kind of breach you are in, right? Or have you fixed that breach? Okay. I hope this makes sense. If that happens, then current, non-current, can impact you. It is just something which is there. I have already given that. Can you get the waiver? If you get the waiver after the reporting date, means on 1st April, it will still be considered as current. But if you get the waiver from the bank before reporting date, you can consider it non-current. Okay. So I am just moving further to make sure that we should be able to cover a lot more than just the things. Any question up to here? Anybody? Any question you like to ask? You like to unmute or ask? Please feel free to ask questions. Okay. So again, moving back to the next statement. Yeah, Jairaj, we can share this presentation. I'll request Ashmeet to share this presentation along with the certificate with everybody. Okay. So now moving further, statement of P&L and other comprehensive income. That's something we were referring to. P&L is, very much simple, which we have already seen, but the accounting of each and every item which goes into the P&L is very typical. We are not covering that here, but that accounting is very, very typical, where how to deal with taxation, how to deal with, ESOPs, how to deal with let's say depreciation, how to deal with any other kind of, let's say, income like revenue, all these expense, all these are very, very typical. They are very complex, but we are talking about that all these items goes into the profit and loss. But there is one item, or there are certain items which goes to other comprehensive income. That other comprehensive income we have already seen. In other comprehensive income, we get only 5 items. One is revaluation, another one is actuarial gains or losses, exchange difference, which is translation differences, financial asset, which is held for long-term purposes, or cash flows. But apart from this, you see 2 things also. One is income taxes here and here. Now, income taxes, when we are referring to, so any income tax, impact which would be there on these items, because these items are not going to P&L. So income taxes related to these items will also not go to P&L, right? Because these has been kept separately. That income also means income tax related to these items will also be kept separately. So that's something which we, which comes under here, right? For the income tax purpose as well, right? In P&L, everything else goes into the profit and loss account, like revenue. Finance cost is nothing but the interest expenses which we are referring to, or any other finance expenses which you may have. Any profit and losses related to associates or joint ventures, basically the group accounting related to items, right? Tax expenses like income taxes. Have you heard of, means definitely must have heard of taxes. So there are 2 types of taxes: current tax and, yes, current tax and deferred tax. Indirect tax is GST. We are not talking about indirect taxes here, or GST, VAT, whatever we call it. So we are not talking about indirect taxes here, because indirect taxes is not an expense for us. It is being received from the customer, transferred to the government, or paid to the vendor and recovered. So that something is there. So because that is not the expense separately, though, we are not covering. Here we are talking about only and only income taxes which comes on the profit which you get on the profit and loss account. Now for that you have current tax and deferred tax, right? And last you get the profit or loss, which is the net profit of this. So current tax and deferred tax related to items which are going on the other comprehensive income side will also hit the other comprehensive income only. So that something is there. Okay. So going back to this, I have already shown you the profit and loss account of the company. It is like the entire income up to here. You can see current, deferred tax and everything. Up to here is all P&L, right? You get the profit for the year. And after that, everything related to this and income tax related to all these will come under OCI, because OCI income tax is separate and P&L income tax is separate. That's something we have considered. I hope this is fine with everybody, right? Okay. So this is just the simple. Okay. So Ashish has asked question on what is the single line of discontinued entity. So discontinued entity is nothing but the business or operations which are a separate business for me, which I am planning to discontinue. For example, let's say you may remember Ola used to have Ola Eats, right? Now Ola Eats was part of the overall, sorry, Uber used to have Uber Eats. I'm mixing it with Ola. So Uber used to have Uber Eats. Now Uber Eats was a separate unit which was actually competing with Zomato or I would say Swiggy, right, of the world, right? So their business was just in the food delivery. That was a separate unit, separate line of business also. But Uber decided to go out of that. Uber decided to sell that business to Zomato and come out of that. That business has been stopped because it was a separate business. So we consider this as a discontinued operation again. Why, what, where, who is getting impact, how is getting impact, that is being covered in the accounting standard, which is IFRS 5. That's something we are not covering. But because it is discontinued operation, that accounting standard says how you should treat the income or the expenses coming out of that. So that discontinued operation will have impact single line item coming in my profit and loss account if I am selling this business, whether I would be making losses or whether I'll be making gain, that should come under the profit and loss account. Now, when Uber Eats gets sold, there may be some assets in that particular business. If those assets are getting sold or liabilities are getting adjusted, that is coming as asset held for sale in my balance sheet. So in balance sheet, you may have asset held for sale. In P&L, you had discontinued operation. So let me go back and show you in this also. So you can see they have mentioned asset held for sale here and liabilities associated with asset held for sale. Now, how this has come? This is getting defined by one accounting standard, but this is something which is there, right? That's how these things comes into picture, right? Okay, going back to this. So this is something which we have seen balance sheet and P&L. Now, what is statement of changes in equity? As I told you earlier, statement of changes in equity. What statement of changes in equity? Statement of changes in equity means equity, what was in the beginning and what is at the end. From beginning to end, how that statement of changes, how that equity is changed. For example, share capital. In the beginning, it was 1 lakh. In the end, it may be something. But what exactly or how exactly it will change? What exactly it will change? Why it will change in the end? What could be the trigger point for share capital to change or share premium to change? Why these get changed? Issue, exactly. If new issues are there, new issues, let's say 10,000, 3,000. New issues will make it 1,10,000 and 1,03,000. Okay, so that something is there. Similarly, buyback also. If there is a buyback, then it can reduce. I'm just giving you one example, right? I'm giving you one example that how this has come. Okay, so share premium, retain earning, and so on. What about retain? What about retain earning? Why retain earning would change, or any other reserves would change? Let's assume it was 9,000 here. Dividend paid, let's say 500. Okay, what else it can change? What else could be the logic? Profit for the period. So that would have the impact of that how my numbers are changing. So 9,000 was in the beginning, it is 900. Profit for the period and dividend is 500. That's how it decide, right? That's how it decide that how my numbers are going to look like. So by looking at this, we can say my numbers in the beginning was 2,09,000. Numbers in the end is 2,22,400, and that is what a shareholder may look at, that how their net worth of the company is changed from 2,09,000 to 2,22,000, right? And they would be interested in that also, right? Why they're interested? Everybody knows, because they are the owner of the company, and for them it is very much clear that how the business is actually getting. For example, they see that there is no profit at all in the company, right? Today, if I am investing in the business and I see that this number has changed drastically, and you may find that if number is increasing drastically, the share price of those companies might be increasing, in very much similar kind of proportion, right? So that's what happens, right? If the growth of the company is showing positive response, it means that you are going to get the value out of the business later as a shareholder. So this is something which we look at in statement of change in equity. That's something we have discussed in the beginning to end. That something is there. So you can see share capital, how it is changed, share premium, how it is changed. Okay. Notes, again, interesting part. What are notes? Notes are nothing but the details. Now, details talks about that what all we are covering here. Every note is going to have a calculation, discussion, description of all the items which has been shown in the P&L, balance sheet, cash flows, and everywhere. Now, thing is, when we talk about details, how these notes are to be prepared, what exactly has to be given. So when we are talking about, right, when we are talking about this, how things are things are going to get, things are going to be seen. So for that, I would say that whenever we are talking about notes to accounts will always consider from the first note will always be that what was the basis of preparing financial statements. Means what was the guidances you are following? Are you following IFRS, Ind AS, US GAAP, IGAP, or any other, right? So that's something will be the first note always, right? Now, that is the first note. What else goes under the notes? If you can tell me, right? Please write in the chat, right? It will be easy for us. Schedules, of course. So schedules, or I can say details of all items going in balance sheet or P&L. Third, corporate information has already come in the beginning before balance sheet and everything. So that something is there. Accounting policies, right? That's something which we have considered as a base, right, Siddhant? Right. So what was the accounting policy which has been given, means which has been followed, right? How you are defining accounting policies for inventory, how you are defining accounting policies for revenue, all that stuff. What else? Information for items not appearing in balance sheet, P&L, or cash flows. Means we call it off financial statement or off balance sheet items. Is there anything off balance sheet which needs to be, given out in the notes to accounts? Something which is not presented up, but has to be spoken about. Legal cases, of course. Now, legal cases, how you record that, we can call it contingent liabilities. If companies has any contingent liabilities that needs to be spoken about, then related party transactions. What are the related party transactions, company is entering into, and how those are being, disclosed. Then you may also have operating segments. Here I am talking about all those items which are required to be shown in the notes to accounts. And this is what is the reason you score the marks when you are sitting for the exam also. This is how you are going to get the marks. Prior period items, right? Prior period items means nothing but your errors which you are correcting, accounting policy change, everything. So this is something which you get. Revenue recognition is already been shown in the P&L and balance sheet. That's something I have already mentioned in schedule, right? So these are the things which we need to look at. The other things look at in the notes to account is what are I would say estimates made by company or management. What was the reason for those estimates? What was the logic for those estimates? Why those estimates were being made? Everything would come and reflect here, right? So those estimates, those reasons, everything should come under the notes to accounts, right? Depreciation is always been into this, note number 2. Anything which has already been recorded may not come, but anything which has not been recorded but should be disclosed will come here. Estimates, how you have come to the estimate, what was the logic, what was the reason? For example, we at times take provisions, right? What was the provision, what was the thing which we are referring to? For example, I can show you that. So you can see the contingent liabilities and commitments is shown separately somewhere in the books. You can see the segment information which I was referring to. The operating segments is somewhat referring in the books. So all these things are showing that how the numbers, how the notes are being presented in the books at last, right? So this is something which we look at, which we consider. Now I'll just quickly take another 10 minutes to talk about this. Then I'll hand it over to Jyoti. She can guide you that how this can be useful for you. But coming back to this, that we have seen that how the financial statements are being prepared, what is the difference in IFRS and Ind AS and all that stuff. These are the general features. What is the basis of preparing the financial statement? When we are preparing the financial statement, what kind of logic which we are looking at, what exactly we are presenting here? So it says we always follow accrual basis of accounting. Our accounting should always give fair presentation, right? Now, what do we mean by fair presentation, right? What exactly the fair presentation means? That books always gives the fair presentation of the information which we want to highlight or showcase there. When we are talking about that, it means that every time you are presenting the books, it should always show the fair, clear presentation to the user of the financial statement. Now, how we arrive to fair presentation? Can anyone tell me how we arrive to the fair presentation? Yes. How we can say that my financial statements are presented fairly? Nothing is hidden, okay? By following IFRS. So nothing is hidden. There is no uniformity, reasonable estimates, completeness, right? No biasness. When we are talking about all these together collectively, the only thing which we can say is that everything collectively can come when you are following the guidance which has been provided. Now, what is the guidance which has been provided to you? Nothing but the IFRS. If you have followed each and every item, each and every accounting standard to come to this, financial statement, this shows that your statements are fairly presented. This can be one of the question of financial reporting, that when you are referring to fair presentation, what exactly you are talking about, right? So it means that you need to refer back that all those features, completeness, uniformity, all those come automatically. You need to mention that, but all those come automatically when you are following the accounting standards. Okay. Then frequency of reporting. What is the frequency of reporting? How frequent we have to prepare? Annually, at least every year. Consistency of presentation. Whatever you are following, you have to be consistent unless there is a change which is required by the accounting guidances. Then moving forward, comparative information. As we discussed, whenever we are preparing financials for this year, we have to give the information for the previous year also. But if the accounting, the third balance sheet may be required just for 3 given purposes, error, accounting standard change, policy change, then the third balance sheet will also be added. That something would be there. The seventh thing which you can see here is going concern. What is going concern? Anybody can tell me what is going concern? Companies should prepare their financials as going concern always. Again, this I have seen as one of the question in SBR and financial reporting both. What do we mean by going concern? So company is not going to be liquidated, or company will keep operating in the foreseeable future. What do we mean by foreseeable future? Foreseeable future is next 12 months. Company will be functioning in at least for next 12 months. We can't commit for unlimited future, but we can always say that it is for foreseeable future. Something which can foresee is next 12 months. So if you can continue with the operation for next 12 months, then it has to be going concern basis, right? At times where company feel that we may not be able to prepare our financial as going concern, right? None of the company says that, but some of the companies, if they are going into liquidation, I can give you one example. Kingfisher Airlines went into liquidation. Then Jet Airways went into that. Right at that time, it was not clear that whether they will be able to continue with their business or not. So then their auditor's role was that they should not prepare their financial as going concern. The last one is offsetting. Offsetting means, can you offset your What are the Kanika Garg has asked the question? What are the condition in financial statement that shows going concern is at risk, and how do we report in the financial notes? How do you identify that, or how do you identify that whether company will be able to continue further or not? We have seen lot many startups which started with so much of equity, so much of funds, but we keep getting news that some of the startups nearing to their end and all that stuff. How do you identify that? Is there something happening around us, something happening which shows that what could be the reason for coming to their end? Applied for bankruptcy, but before that, right, applied for bankruptcy could be the last resort where it is very clear. But up to that, how do you identify that there could be some red flag, there could be some reason where these startups or these companies may not be able to run for long period? Negative cash flows and long-term negative, or I would say the losses which company is getting, right? Company is not able to recover from losses and not able to get any funding on any sort of cash flows, not able to arrange any cash flows. When that happens, right, this shows that company is moving towards their end, right? Because when nothing is going to come to save them, then the chances that company may go into the liquidation, and that is going to be the challenge where we need to see. So auditors always come back and say that you are carrying losses from long term. Will you be able to manage to get funds to manage these losses, or will you be able to turn around with anything? If you can still be considered going concern. But if you can't, then there is a going concern challenge, and company has to clearly say that we are preparing financials not as going concern. And when not as going concern, then balance sheet items, all the assets, all the liabilities, the value of those items and liabilities changes. They are always kept at liquidated value. Means how much value will be able to recover. Kanika, I don't think so, right? Again, negative cash flows, losses is just the indicator that you go and ask the management, right? It is not the case that going concern challenge would be there. It is just the indicator that you go and ask the management that whether you have funds to manage further or not. If not, then yes, there is a challenge. Okay. So last one is the offsetting. Can you offset incomes and expenses? No. Can you offset asset and liabilities? No. Offsettings are not allowed. right? So in balance sheet or in P&L, offsettings are not allowed. The only offsettings which may be allowed as per the accounting rules of different accounting standards can only be allowed. Otherwise, the offsettings would not be allowed, and we will never offset. So if, let's say, government grant allows offset asset with liabilities, then you can do that. If government grant allows income with expenses, then you can do that, otherwise not. So that's something we need to be careful about, that what accounting standards are saying, right? And the most important part, which I have missed, materiality. It should cover all the material items, right? Immaterial will always be ignored. All the material items. So now, what is material? Something which can impact the decision of the company. Now, materiality is not defined anywhere in terms of the numbers. Materiality is always dependent on that what exactly is the value. Anish, exactly. I think that's something you have clearly mentioned. Inability to turn around, inability to raise fund, inability to raise debt, right? For anything, okay, could be a issue. But these are just the indicators, right? Again, at times you may I have seen that one of the the telecom player was struggling from long time, right? It was in the news that they have secured some funds yesterday. We don't know, right? So they've been struggling, they've been carrying losses from long time, they've been carrying income taxes issues from long time, but they were having going concern issue. Answer was no, because management was saying that they will turn around, right? And they got the funds. Nobody was thinking that they may get the funds. They were looking for the funds from long time, but they got the funds just now. So again, these are just the indicators, not the factors to be considered whether it is going concern or not. Okay, so that's something I was having in this. This is something I disclosed. I discussed everything. So this is something I was having for the presentation of financial statement and IFRS thing. This is just a part of, I would say, the ACCA, and very small part of ACCA. When we get into ACCA, when we talk about IFRS in detail, we have lot much to look at. We have lot much to catch up. So that's something, that's something we can, we will see in detail. So everybody, any query related to what we have discussed just now, please let me know. You can still ask the queries, later also. We can share our contact details with you. I'll share this presentation. How long does it take? So Sneha, how long does it take to take the complete course? Depending on that, which level you are coming from. What is your earlier qualification? That will decide that where exactly you come, you join the program, and then how you carry on with the program. If you are BCom, then you get the 5 exemptions now, and you just have to give 8 papers to complete. Ashish, does GT provide on the job training also for IFRS only? We do provide. You have to go pass the interview. You can share the CVs. We can pass it on to the relevant. Okay. Naveen, of course, you can do ACCA. ACCA brings a different value. I am not going to discount the master's degree you may have, but ACCA brings in a different value. If you wish to work in finance and accounts department, because it's a professional qualification, then of course is there. Now, thing is, when you have all these queries which are there, I may just request Jyoti to come and discuss couple of points which are related to the qualification, which may address most of your queries, without me answering those, right?
Right. So what will happen in ACCA? Na? ACCA, as you know, it's a professional degree. So what ACCA will do? Am I
Jyoti,
audible to
sorry,
everyone?
I am just stop sharing my screen. If you can
Yes.
share the screen and then talk about those,
Yes.
or Ashmeet, maybe you can share screen.
Hello, everyone. It was really, really nice connecting with you. And thank you, everyone, for your for your time for this master class. So, as your ACCA is concerned, what will happen in ACCA? Basically, there will be 13 papers in ACCA. And as per the qualification of the student, ACCA will grant some exemption. Suppose if you are doing MBA, BCom, Chartered Accountants, or CA enter, according to the qualification, ACCA will grant some exemption. So if you want to know more about the qualification, the exemption part, you can directly call to my number, that is 8527272863. If we will talk about this route to ACCA, so what is a route to ACCA? So if we will specifically talk about 12 students, so 12 students they have to go with all the 13 papers of ACCA, and as exam will held 4 times in a year, that is March, June, September, or December. And if the user or of if the student will go one by one paper also, so it will hardly take 3 years to complete it. Second thing, if you are a BCom graduate or MCom graduate, so ACCA will provide exemption in 4 papers, and you have to write with 9 papers, and maximum duration will be 2 years. There is no specific duration. You can complete as per your convenience, but maximum it will take 2 years to complete it. Same like CA IPCC student or intermediate student. So that depends upon the group, like how many groups you have cleared. So according to that, maximum exemption will be 7, right? Same like if you are a CA final student, then again it depends how many papers you have cleared in your CA final. So the maximum exemption is up to 9. And for chartered accountant or CMA qualified who is having experience of more than 5 years, for CMA qualified, they will get exemption in 9 papers. But for chartered accountants, fixed exemptions are there, that is 9 exemption, and which you can go with only the 4 papers, which you can complete within 6 months also. So if you have any query related to the exemption, the duration, or any other related to ACCA route, you can contact me directly. I have already shared my number on chat box, so feel free to call me. Now, do you have any specific question which you want to ask? Anyone? Sneha, like overall cost depends. Like first thing is that first we want to know like how many exemptions you are getting. If 12 student is there, that maximum cost will be 3 lakh rupees, inclusive of that ACCA exam fees and all. Anyone? For exam for CA, there will be basically 4 papers for chartered accountants. There are 2 papers mandatory. Ashish, 2 papers mandatory are SBR and SBL, that is strategic business reporting and strategic business leader. After that, there will be 4 optional paper where you have to choose 2. 4 optional papers are advanced financial management, advanced performance management, taxation and audit. There you have to choose 2. So total 4 papers you have to appear. Hi, Naveen. So about the job opportunity. So once you will qualify ACCA, so there will be always an opportunity to work with Grant Thornton. Cost for exam, that depends, because there is a cost for exemption fees, annual fees, exam fees. So Ashish, I request you to please call me directly. So I will give you the brief idea about like what is the exam fees, exemption fees, Grant Thornton fees and all together. See, the queries which I am getting, that is related to exemption, the fees, and eligibility. So first thing is that anyone can do ACCA, whether you are BCom qualified, whether you are from finance MBA field, whether you are from engineering field, anyone can do CA. Second thing is that the duration depends upon the exemption part. Maximum you can complete within 3 years, but if you're getting few exemption, so the time will reduce accordingly. Hi Naveen, I will explain you in separate call like what is the cost included, everything like registration, exemption and other charges. See, because for every individual qualification, the exemption fees is different. So accordingly, I will provide you the details. Yes, Raj, we are providing coaching for all the levels, like knowledge level, where 3 papers are there. skill level where 6 papers are there, and professional where 4 papers are there. We are providing classes and will help you in throughout your ACCA journey, like your ACCA registration, how to claim exemption, when or how to pay the fees. Everything we will take care of. Yes, we do provide classes by 2 ways. First is online live classes, and second is only the recorded session.
Okay, I would request if we can quickly run through these deliverables, what
Yes, definitely.
we offer as a part of our ACCA journey. I think a lot of questions of the participants would be answered post this itself.
Yes. So what we are doing at Grant Thornton, basically we are providing ACCA training by 2 ways. First way is live online classes. Mostly we will conduct the classes only on weekends, that is Saturday and Sunday. With this live online session, will provide you recorded also, and there is no restriction on viewing of the classes or the validity period. With live, you will get the recorded session also, the hard copies and books as well. So we are providing basically classes by 2 ways. One is live online classes, and second is the recorded one. Second thing is that key ACCA approved content provider study material. So we are the approved content provider for ACCA. So basically you will get the approved content by ACCA. You will get the hard copies of books also. We have qualified faculties for ACCA classes. They are mostly CA and ACCA qualified. Fourth step is that we always conduct mock test, revisionary test, or doubt session time to time, right? And there is a fees waiver exemption up to 80K. So what it means, which we have discussed already, ki as per the qualification of the student, ACCA will provide some exemption. And according to that, Grant Thornton will help you how to claim the fees waiver in exemption fees. And just to help our student, what we are doing, like we are having a tie-up, so where we are providing loan facility to our students, where they can go with 6 months, 9 months loan facility also, with 0 interest and 0 processing fees. It means no cost EMI. Coming to the next slide, we are providing. So what we are, apart from this classes, what additional benefit we are providing? We are providing internship opportunity with Grant Thornton. Sorry, the free mentorship. So what is mentorship? So mentorship we have divided into 2 modules. One is specific related to your studies, and second related to your career, right? So our mentorship plans, we have 2 modules where the mentor herself is ACCA qualified, and she will help the student by 2 ways. One is what is the plan, strategic study plan, ki kis tarike se we have to study, how many hours we have to spend in our studies, like everything related to your studies, like how to prepare your schedule for the upcoming exams, right? And throughout your ACCA journey, she will help you all related to studies, ki what is CB exams, how to write CB exams, how many mock tests you will get, how you're able to crack the mock test, everything related to your studies. Second thing is that she will help you career-wise also, like career-wise, like how to build your CV, right? How you will get internship opportunities in other companies or in Grant Thornton also. How you can prepare yourself for the interview, right? So Rohit, if you want to add something in this.
I hope I'm audible to everybody. So, Jyoti, thank you so much for explaining that how ACCA journey with Grant Thornton looks like, and what are the additional benefits which we are offering to the our students. I think one major point which we had highlighted at the starting of this webinar also, that Grant Thornton is the only learning provider in the market which is both an approved learning partner as well as an approved employer. So we do understand that in the entire ACCA journey, where are the gaps which a lot of other educational institutes are not able to fulfill, and that's why a lot of people who are even completing their ACCA journey are not able to get employed or get kind of opportunities which the other peers are getting. So that is one area which we are trying to address during all our training sessions, whether you opt for e-learning or online live classes. Along with the conceptual knowledge or the academic knowledge, we try and link every concept with how it would actually be implemented in the practical scenario and at the workplace. So that is where the USP of Grant Thornton and our experience comes up. A lot of our faculty members who come and deliver these training programs for us are also actually practitioners of these. So along with their teaching and their passion for teaching, they have also done some kind of implementation in their career span. And they do these kind of experiential sharing during these sessions. So the learners or the participants are not only focused on clearing the exam, but after clearing the exam, they are also focused on applying that knowledge in the job, in whatever job field they decide and go post completion of ACCA or during their ACCA journey. And we spoke about our unique mentorship plan. I think why this unique mentorship plan becomes very important is that a lot of people, when they are starting their ACCA journey, are quite motivated, but in between that journey, they try and feel a little lost, where there's a lack of guidance. They are not able to, cope up with the pressure of studies or mixing studies with work. That's where the role of mentor becomes very important. The mentor would actually help you both from an academic front and from a career front also. So how to schedule your exams, which exam to go for first. In case they would also help you in scheduling your days, that how you can take time out for study out of your busy schedule. So all those small tips and advices which actually don't feel you lost in the entire journey is what our unique mentorship plan does. And I can really vouch for this, that when we were designing this mentorship plan, it was bang on with the objective to help our students. And a lot of students have actually benefited out of this mentorship plan. It has helped them in clearing their subjects in one attempt itself, helped them in strategizing a lot of things. So this actually becomes a very practical tool for students to help. So these are some areas where Grant Thornton tries to differentiate itself with what other players are offering in the market. And for us, every student is not just a transaction that just the student enrolls with us and then we are not aware that what exactly that student goes. We try and define the journey of each student who's enrolling with us, whether the person is enrolling for us as a freshers simply out of class 12 and enrolling for us for 13 papers, or probably a BCom graduate enrolling with us for 8-9 papers, or a qualified chartered accountant. Each of these users, depending on their current background or their exemptions level, have a different kind of journey which they go through in their entire ACCA series. And Grant Thornton would stay with them with their entire journey. We give access to classes till the time the students are unable to clear the examination. So it's not just one transaction that you enroll for one examination, and even if you're not able to clear the examination, our role is finished. No, our mentorship, our faculty members, everybody would be there till the time you are able to complete your ACCA journey. And we are not charging anything additional for these kind of services. This is something which we believe, if a learner has shown a certain degree of trust in us, this is something which we need to give them to fulfill that trust. And for us, it's very important that your careers are of utmost importance, rather than only minting some money with one of the transactions. That's not the objective with this LearninGT operates in the market. So that's in all what Grant Thornton brings to the table. I'll leave the forum open for any kind of questions which we are happy to take and answer those.
So, Rohit, there are certain questions which has come up in the chat
Sure.
box. The recent one from Daria, who is our colleague as well in WCC, right? So Daria will definitely connect with you separately, but just to answer your questions with the scope of ACCA in the firm as well. Yes, we since I've been working in the firm for the last 5.5 years. So I have seen the tremendous change in the firm philosophy with respect to the hiring of the ACCAs, the scope of work being assigned to the ACCAs, and the level of acceptability across the firm of the ACCA professionals, right? So ACCA we are the first firm which came up with a solution that we will treat ACCA professional at par with the CA trainee. with respect to their qualifications, job roles. As a GT, as a Grant Thornton, we don't foresee any changes with respect to the qualifications, their levels, the scope of work, and everything. Yes, the if I say in the next 5 years, the scope of ACCA within the firm is growing tremendously. Is tremendously what we have seen previously as well, and what we forecast for the next 5 years as well. And not in GT, but if you say across consulting firms, in fact, industry has started recruiting a lot of ACCA professionals. Since we daily we interact with the ACCA body, people who are leading in India, so they have given us a data which shows us a lot of industry is nowadays recruiting ACCA professionals as well, right? So we as a firm are very responsible with respect to if we say there is no distinction for us in terms of qualifications, we respect all qualifications, right? And there is one more question, Rohit, which says about as in a GT, what's the methodology which is common Q section, then what the delivery methodology is we adopt in delivering the program, right? So I'll just take up this question as a delivery methodology. If I say being an audit advisory firm, a lot of hands-on experience we try to imbibe in the program. Second, this is their three-pronged strategy what we adopt in for the ACCA. First is that we prepare you for the examination as per the schedule or the agenda which has been described by the ACCA. Second is that we prepare you, we mentor you for the examination. We support you with lot of mock tests, lot of preparation is being done before giving the examination. We do a lot of in one-to-one discussion with the participants, all the participants before they appear for the examination as well, right? So as an GT, we take this qualification very seriously when we are going to deliver this qualification, as we are working on a model that since it is not the public workshops which we do for the ACCA, we are working with a lot of universities where we are teaching university students on the ACCA as well. And we as in a policy, we are looking to hire and train people as well on ACCA front as well. Not on ACCA if I say, but we deliver a lot of training programs like business analytics, data science, all these programs we deliver it. So that is where as an the delivery methodology is there to give lots of hands-on experience, practical exposure with respect to any of the papers involved in the ACCA. Yeah, Raj, please, you can take the next question.
Yeah, any 1 second, I'm just...
One more question is there ki whether I can complete all the 4 papers at one go. Yes, you can go with 4 papers together because as per the ACCA policy, you can go with 8 papers in a year. But we always suggest objective is not to give paper. Objective is to clear the paper. And as a working professional, you will not get sufficient time so that you can able to crack all the 4 papers in each quarter. So we always suggest maximum you can go with 2 papers in each quarter. But your answer is yes, you can go with 4 papers also.
Guys, any more questions? Because I think we have taken major chunk of questions which are there either in the Q&A box or the chat window.
So there is one more question in chat in Q&A section, Rohit, which asking about, I think about the internship opportunity what GT provides for the PER or during the course of qualification.
So guys, as stated earlier also, as a part of our deliverable for the ACCA qualification, the learners who are registering with us for a minimum number of papers are eligible for an option to sit for an interview with Grant Thornton for internship and final placement opportunities also. There are certain terms and conditions which needs to be fulfilled. And the final decision of the internship or final placement remains on your interview performance and the other parameters which are laid down by our HR. So directly, yes, the opportunities would be provided to you. As I said that we are one of the largest employer for ACCA qualified professional and ACCA part qualified professional also. So for us, it always becomes an obvious choice that people who have been trained by us, who understand Grant Thornton values, the way Grant Thornton works and the different solutions offered by Grant Thornton, they do become our preferred choice. And this opportunity would be provided. And once anybody wishes to enroll, all these things would be discussed in detail with every strings attached to it, and then you can go ahead and decide for the enrollment process.
So Rohit, there's one more question which is asking about the global possibility of working globally post doing ACCA from India. right? So guys, yes, ACCA is one of the qualification which is accepted globally, be it Switzerland or UK or Europe or US, anywhere you go, it is accepted as a qualification. And yes, you will definitely basis your qualified papers and how much you have qualified the papers, basis your performance in the interviews and other skills which we acquired during the course of this doing the qualification, the possibility of getting a job across globally is there. And there is one more question, Q&A section just got it, Rohit, is about the delivery, what all we provide as in a box, other things, what all the deliverables we provide. If you can share on that.
Jyoti, would you like to highlight that?
Yes. The deliverable will be like whether you can go with live online classes or the recorded session. First thing is that you can choose anyone. Second thing is that with these classes, we are providing hard copies of books. You will get 2 books with each subject. One is study material and second is exam kit. Third thing is that we'll create a WhatsApp group also for individual subject where the faculty is also available. So suppose while watching that recorded session, if you have any queries, you can immediately post in the WhatsApp group. And apart from this, we'll create a online live doubt session time to time. And we are always there through your ACCA journey, if it's related to your studies or whether it's related to your ACCA registration and all. So everything will be taken care by Grant Thornton only.
So just to add on, as in a Grant Thornton, we have a dedicated elements, as Jyoti mentioned, where all the content, recording, mock test, various resources, study resources are being available for you till you pass the examination. It is not that we are going if you're taking longer time in clearing examination, GT would not help you. We are there to help you to clear this qualification, right? All the 13 papers. And going by the exemptions, I think we have seen a lot of people who are chartered accountants get good number of exemptions, and they have to just apply for the 4 papers. If you are MBA finance or if you are graduation, if you did graduation, there are certain exemptions also available. So I will request if please reach out to the team, to Jyoti or Ankita, anyone who would help you in getting the exemptions and a discounted fees for the examination as well, which will help you in reducing the overall cost of the program.
One more query is there by Aman ki the clarification teachers use English or English. See, the faculties are using only English, but sometimes if you will not comfortable in English, so you can ask the faculty for specific clarification in English also. So we are basically using English, but if you're not able to understand, so you can request the faculty to clarify in English also.
And Rohit, there is one more question which has just come up, as an user has not mentioned his name. Primarily, it's regarding to the differential fees comparative to the competitors, and what is the passing percentage of people who enroll with GT for the ACCA program. If you can take it up, Rohit.
Right. See, in terms of differentiation, see, it would be very difficult to comment on what our competitors are charging right now and what our fees is, because that would be a little difficult to discuss it on an open public forum. But our pricing is quite transparent in whatever we are offering. Our website clearly lists down that what exactly is the MRP of different modes of training which we offer. And there are certain scholarships in the form of discounts which are also offered to various participants, and we keep on coming up with various offers from time to time. There are certain exemptions which are provided, exemptions on and waiver on the exemption fee, which is provided by ACCA, and the same is directly, passed on to the students. So we don't keep any share in the ACCA exemption or waiver fee. Whatever exemptions are given, those are given directly to the students, and Grant Thornton in its own capacity has no control over it. And we are absolutely transparent with the process. The registration process on the ACCA portal happens with the student being available, and student can exactly see that how many waiver have they gone and what is the waiver fee applicable for them. And before enrolling for any of our programs, we absolutely have complete transparent discussions with our learners that this is the fee which you need to pay right now. This would be a tentative fee which would be waived off by ACCA. All those things are absolutely documented and sent to you over an email. And once it's an acceptance from the learner side, then only we go ahead and close the deal. We also have financing options available in which also we provide no cost EMI. So the interest part is also borne by Grant Thornton, and in some cases, people who want to opt for the EMI option. So that also as a deliverable or as a scholarship is available to the learners who are enrolling with us.
Just to add one thing, Rohit, with respect to the passing percentage, what we have. Recently, ACCA is doing a pan-India event in major cities, and in each of the cities we have a good number of students who are participating, who have passed from their examination in that group, right? In Delhi itself, we have a good number of students who participated from as a representative Grant Thornton as a student, right? The passing percentage is almost 75%. Is what we have, is what we are claiming, and is there in our records as well, right? And you can if anyone wants to visit us, you can visit us in any of our offices across India. In Delhi, we are in Aero City, we are in Connaught Place, we are in Gurgaon. In Mumbai, we are there. We are in Pune, we are in Chennai, we are in Bangalore, we are in Kolkata. Across all cities, all the programs which we do are online live. But yes, if you want to visit office, you can definitely visit, and there would be people who will have there to help you. In fact, I think Aman is asking how many students in a batch like skill level, audit, assurance group, right? So difficult to I can't share the numbers, Aman, on the platform how many students we have in the batches, but yes, on the passing percentage, as mentioned, 75% are is the average passing percentage of all the papers what we are claiming is there on the records. Because our motive is again just not to study, but to how to get the students qualify this chartered qualification, which is a global qualification. And considering if you're qualifying, and currently Grant Thornton being the audit assurance firm, we are looking for people who qualify the ACCA qualification. We would love to hire those as well. If you just go through all our HR rounds and the technical rounds as well.
Yes. And basically one question was there now, why what competitors are providing, how they are providing. See, we know ki what we are providing, how we are providing, because we are not our main objective is totally different. Our main objective is not to provide classes only. Our main objective is that the student who is enrolling with us, first thing is that they should clear. Second thing is that ki being a Grant Thornton, we want ki if we are providing classes to ACCA student, so if required, we can hire them in our company only. That is our main focus.
Guys, you see Vibrant Bharat written on all of our backgrounds, and that's what Grant Thornton, through our solutions, are providing, that we are contributing in building a Vibrant Bharat. And similarly, LearninGT and the solutions which we are providing, different kind of training solutions through our training programs, are actually building a Vibrant Bharat for us. And that's why when we are training people, it's become very important, because these are the people who would actually then join the workforce and actually start shaping up how the India story grows from there. So that's why we are focusing on that. It's not a only business for us. It's more than business. It's more than just a transaction. We are here to support you through the entire journey, because eventually once you become thorough ACCA professionals, you would be contributing our growth journey and contributing with other firms and other organizations in the entire India growth story. And that's where the Grant Thornton focus lies.
I think there's one very, very interesting question which has come up with the Q&A section. So someone asking what all the other skill sets as a Grant Thornton is providing parallelly to ACCA qualifications, right? How we're building them for the job opportunities in the market, apart from training on ACCA.
Right. I think that's a very relevant question, and I think this is something which we always get whenever we are dealing with university students or people who are just at the starting of their career. And it's a very valid point in the sense is that these days how the technology advancement and advancement in any domain, be it finance and accounts, operations, sales, marketing, everything has been disrupted by technology, and the expectations of corporates have also changed over time. So apart from the ACCA academic knowledge, I think the one part is that we always link that academic knowledge to how that could be applied in the real world scenario, which we have been talking about for the past 2 hours, and that's one of the biggest USPs. Apart from that, we also have a lot of short-term programs, short-term certification upskilling programs, which we have in our learning, management system library. These programs covers topics like specifically like IFRS, financial modeling and valuation, some upcoming tools starting with MS Excel, Power BI, Tableau, data analytics using Python, R, forensic accounting, and fraud investigation. So there is a whole plethora of courses which we have on offer. We do offer these courses as complimentary and as a part of scholarship programs. For the learners who are registering with us. So these programs not only help them, so number one, they have the complete ACCA knowledge with them. These work as in value addition programs or add-on programs that after doing ACCA, if somebody doesn't want to go in accounting or audit, and they want to pursue something similar to in finance, forensic accounting, so they can do that, or probably they want to pursue somewhere in the mergers and acquisitions or the valuations part. So they would have these kind of add-on programs, they can do that. And during the mentorship sessions, which we talked about, we also focus on developing your soft skills, be it your communication skills, be it your interview skills, tips like CV writing. All these things are covered as a part of our overall package. And there are small capsules in between which are provided to our students. We also keep on doing a lot of sessions which are apart from ACCA during the ACCA journey. These could be mentorship sessions, these could be soft skill session, also customer handling skills. People who intern with us, we take them to a lot of client calls. Now they are not supposed to actively be involved in those client calls, but they are there as a mute spectator or a mute observer, so that tomorrow when they are actually adding coming and joining the workforce, they have a fair idea that how a client call looks like, how the opening pitch is done, how the closing remark is done. So they have a fair idea of these things. Now, this is something which uniquely only Grant Thornton can provide. Because why? Because we are actually doing audit, we are providing audit, we are providing financial accounting advisory services to our client, which none of other service providers, at least in India, who is offering ACCA coaching, ACCA qualification, can replicate. And this is a unique advantage with a firm, which a 90-year-old firm like Grant Thornton can offer to its students. And that's what we want to build upon. As I said, we just don't want to build upon pulling numbers and having 60, 70, 80 people attending our batches. We want quality resources to come and join our batches who actually want to make an impact in their career, and they're just not doing ACCA as a stepping stone or as a qualification. They are passionate about accounting, they're passionate about audit, they're passionate about their careers, and that's we want to be supportive with them and ensure that they reach those kind of heights which they want to achieve in their respective careers.
Exactly, I echo this, Rohit. As a granddaughter, we have the extension as we are the only one who are the trainer and the employer also for the ACCA. We are the gold approved learning partner of ACCA, where they approved employer of ACCA as well. The whatever we train students is on the basis of what we experience it, right? We as a consultant, we have a lot of challenge, the problem statement coming to us from the clients, we provide them solutions. These are the practical things which we are the only one who can offer to the students, and that is why the passing percentage is higher than if I compare it with anyone in the industry.
Guys, thank you. Bye-bye. Signing off.
Thank you everyone.
Thank you so much.
Thank you.